Well, today what I'm showing is the market has appeared on 10/17 or 10/7, October 7th, and this is the market replay program, so it's a recording. But what I wanted to show was the same methods that I use for live trading. They're identical, and I use them the exact same way I show in a demonstration here. And I just made a previous recording, which I'll show in the description, of a graphical examples of the system that I'm using. And as you'll see, it's very profitable. So if anybody has an interest, these results are real-world results. They're not any theory. These are as they would actually occur using the system, and they do every day. I use the same system every day, and using the system on a live trade works exactly the same as it does on the replay program. So there's virtually no difference here. And so, like I said, I'll include a link in the description to a recording I just made showing the method. And there are a lot of areas where I misspoke. I'm not really good at speaking because my mouth doesn't keep up with my thoughts. So I do the best I can do, but hopefully that helps explain what I'm doing on these charts with the live trading examples. To set up the chart, I'll go into the extended options in this particular software platform. This is from the OEC Trader, and they have a really great platform available online. It's free to use, but I think it's the best one because it allows trading directly from the charts. And what I'm doing here is setting up the bracket trades, which are the automatic orders. And I've set the I'll show you how that's set up here. Basically, I can't do that with it open here. Basically, it's set up if I'm going long, if I'm buying, the software will automatically place a limit order above the market entry point. That's my target. So it's a sell limit order, which would counteract the buy trade. So it's a long trade, and if it hits the sell limit order, that would get me out of the trade at a profit. And on the other side of the market entry point is a sell stop. So if the trade were to go against me, this area to the sell stop here is the loss I would incur. And this is the insurance policy, because you want to limit your loss at some point. As the name says, it stops your loss and limits your risk. So you always want to trade with a stop loss order. So this one, I recommend always having the computer program place automatically. When you enter a trade, it'll place your stop loss automatically. Then once you're in the trade, if you need to adjust it, you can always move your stop loss to fit the market you're trading a little bit better. I like to set my stop loss at 5 points, and if the market's maybe not that volatile, I can change the I rarely change the 5-point stop loss, but if I want to move it up or to lock in profit, I can do that. The target is not as critical. I always recommend trading with a sell stop, but the sell limit order for the target, depending on the strategy you're using, you might not want to use a target if you're using a trailing stop loss strategy. So I'll show that hopefully in an example here. Sell bracket is the same thing in reverse. This is for short trades. You set up the if you were to go short at the market entry point, the software automatically enters a buy stop loss as your stop loss, and a limit order is your target. So this would be the profit area. You're profiting by the market falling, and the buy order would counteract your sell order that got you into the trade, and you'd be out at a profit in this zone right here, and this would be your loss if it moves against your short position, and your buy stop order would get you out at a loss, predetermined loss, which is your risk for taking the trade. But once you're in this zone right here in the on a short trade, you're in the profit area, and you can actually move that stop loss to lock in your profit once you're in the profit zone. And same thing with the in reverse with the buy area. This is your profit zone from the market entry point to the sell limit order. That's your profit area, and you can move the stop loss to lock in any profit in that zone. So I'll just go ahead and set that up here, or show you what I have set up. If it's really a volatile market, I'll set it set the targets, which are the limit orders, to 5 points. In this case, I think if you're a new trader, 3 points usually work out well in most markets in the first 2 hours after the U.S. Open. And usually it's going to hit a 3-point target on the NASDAQ E-mini contract. So 3 is a very comfortable target, 3 points. On this particular day, I might have set 5 points and hit most of the 5-point targets in the first hour, but we'll just we'll make it easy and hit the 3 points very quickly. So yeah, I have the buy bracket. The targets are set at 3 points. Sell stops are set at 5 points. The sell bracket, sell stops are set at 5 points. The target is set at 3 points. The target's a limit order. The sell stop is a stop order. And so that's how you set up the bracket trades for each long and short position on the trading software. So I'll just go ahead and start the market replay program. I'm already into the first minute here, and let me set the recording speed to, or playback speed to 1.5. So as always, the first thing I'm looking for is a fractal or a crossover, and by fractal I mean a hook type formation. But you never want to really trade in the first minute, or I never try to trade in the first minute, but depends on what it's doing. If it is making a crossover one side or the other, I will trade those even though I don't have a full fractal yet. Right now it looks like it's crossing to the upside. I'm talking about the ADMA line. It looks like it's crossing over the 14 simple moving average to the upside here. And let's see if it maintains that uptrend. I might want to be long at the next open, as long as it's close to the ADMA line. So I'll get ready to be a buyer here. I've got my mouse on the buy at the market button, my mouse cursor. You can also enter on this cursor here, cursor line. If I want to enter a buy stop, I'll just enter a market order usually I don't want to enter on the Bollinger Band lines. For some reason the software wasn't getting me out there. So yeah, that's how quick those trades can go. Usually on these first trades, before it's established itself, I'll kind of violate my rule of not buying or selling on the Bollinger Band. In this case, it was pretty close to the Bollinger Band line. After the trend got established, I would not want to be a buyer or seller in these areas, but it's really starting the new market, so I can see that there's upwards momentum, and so I felt that was a good risk to take that trade. Good gamble there. Usually the first trades after the crossover are going to be your highest odds trades, and you're pretty well assured it's going to at least make 3 points in the direction of the new trend. I can already see that. It's each price bar is moving pretty good amount. I think this one is 1, 2, 3, 6, 7, 8, 10 points. So we're averaging about 10 points. So if you're trading a 3-point target, there's pretty good odds that's going to get hit. What I'm looking for here is another fractal. Whoop. That's a fairly long drop, indication of a long drop. When the low, if you notice this low, this price bar is right up against the Bollinger Band. We had a close outside the upper Bollinger Band here. Bollinger Band being these gray lines. I've colored them gray to differentiate from the other indicators. But usually if you get a close outside one of the Bollinger Bands and then you get a reversal through the Bollinger Band and then followed up by a break below the low, which is up near the Bollinger Band, you're going to get we've already seen it happen, already a retracement or reaction swing all the way back through the ADMA line, and see how that ADMA is starting to curve downward. I can't be a long trader again until I see it start moving upward again and bring this line back up. But otherwise, this could also be a trend reversal. So if it breaks below this this magenta 14 simple moving average line, which is the center line for the Bollinger Band, I'll probably want to be a seller there. So yeah, I've got all these indicators right here telling me what it's probably going to do, so it puts me on alert, so I have the information well in advance if I put it at normal speed here. I said I'd sell, but it doesn't look like it has a lot of thrust going into that 14 simple moving average, so the more conservative move, if it is going to cross over, I'll just wait for the actual crossover to occur first. That's the safer thing to do. And you can see it's moving back. If I would have entered there, I would have probably been stopped out at my stop loss because it's moved back into the upward trend here. But it's still curving inward, so I'm just going to let that develop until it's really looking like it's trying to reverse trends here. Then again, I've seen many of these. If it's looking like this, sometimes it'll continue with the uptrend or the downtrend if you were to reverse this. So you can never really judge until you actually get the crossover. If it were to continue with the uptrend, I would just look for momentum upward in this line to be the ADMA line to be moving out and away from the 14 simple moving average line. See, right now it's looking very much like a crossover, so I'd want to trade the breakout through this close there. And you can see my targets are so close that this should hit it. I mean, a very conservative target of 3 points for this particular volatility. So there, that was pretty easy to hit that, even if we don't get a full crossover here. So now we're looking at the down move, and I can't trade it as it gets close to this lower Bollinger Band. I've got to wait for a retracement, or some people call it the reaction swing, back to the ADMA line first. You always want to trade from the ADMA line outwards towards the Bollinger Band envelope. You don't want to trade the reverse direction from the Bollinger Band to the ADMA line, because those moves are less predictable. So you just kind of have to wait it out. A trailing stop loss would have been good there. Usually a trailing stop losses work well after the ADMA crossovers. So I could trail the stop loss behind the low of the previous bar, or get out when it hits the Bollinger Band, because it's most likely to bounce at that point, because Bollinger Bands act like support and resistance even in a trend. I'll just speed it up to the next P3 point here. See, anytime you get a break above the in the uptrend, if you got a break below the previous low, that's a significant event right there. And anytime you get a break below the above the previous high in the downtrend, that tells me that we're looking for the P3 point to form, and we're looking for, if this ADMA line remains downward, we're looking for a quick trade in the downward direction, but as close as possible. We see how the momentum here is moving from the open of this price bar and the close is well above it, so the direction of movement is upward. We don't want to trade when it's moving opposite the intended direction of trade. We want to get in the trade just as it's starting to, it hits what I call P3 point, stops and reverses, and then starts moving back down into the trade direction. So you always want to be trading the momentum here, and the trick is finding that P3 point, and that's what this ADMA line really helps out with. As long as your timing can be a little bit off, but as long as you're buying close to that or selling close to that ADMA line, and the line is slanted outward from the 14 SMA line, your odds are very high of hitting your target, even if your timing's slightly off. Okay, so I'll just slow it down to normal speed here. Getting ready to sell. I want to sell as that ADMA line starts bending back down. I don't want to sell when it's moving back upwards. So, whoop. Timing might have been a little off there, but since we're using such small targets, still high odds of getting hit. I'm just showing basically you could use longer targets on a day like today, but you can't go wrong. You know, we're already up $200 in the first less than 15 minutes after the open. And so you can't go wrong trading 3-point targets. Okay, we'll speed up and look for do the same process. We're looking for a continuation. Now that could be a trend reversal right there. I don't know yet. And the best policy, if you're going to trade conservatively, is always wait till the crossover occurs first. If this angle, or if this corner where this blue line meets the 14 SMA line, the 8 period moving average, exponential moving average, when that meets the 14 simple moving average line, and it forms a really small corner area, I might consider going long before the crossover, but it has to really show me that it wants to move that way. But right here is a good example of it looks like it's a trend change is about to happen right there. But now it's falling back in, so that's looking weak still. So I'm watching that 8 EMA line. If we're on an upward move right here, but you know, if we get another bar that falls below that this close right here, and it's kind of if this was our same bar move, I probably would have already missed the trade. But I'm entering the trade too far away from the 8 EMA, so my objective is to enter that right on the. Probably missed it. Yeah, that might be some bad timing right there. I was too busy talking there. See how I'm right on the support line? So yeah, that might be a badly timed trade. I'm going to try to exit if I get back into the profit zone. Profit zone would be from the entry to the target. So I think I think I got in this one poorly timed. So I'm just going to get out of it. It may come down to hit my target, but I just wasn't sure about it. Anytime you're unsure, you can always exit out of a trade with this quick little feature right here. The exit at market and cancel button makes it really easy to, if you get into a situation where not too sure about, just exit the trade. As long as you're in a profit, I try to get in at least some profit, even if I make a mistake. Like I said, the objective is, you see how as it starts to move down, it's drawing the 8 EMA line down. But even at the time when the 8 EMA is up a little bit higher, we can still tell when we're entering a trade close to that line. But what I'm trying to do is, if I don't want to enter too far away, over 2 points away from that 8 EMA line, I don't feel comfortable. Preferably I like to enter the trade as close or right on top of that line as I can. So it's still kind of moving in an upward direction here. We haven't really made a, there we go, we made a P3 point right here. And so I'm getting ready to sell another one if we're not looking at a reversal here. right on the Bollinger Band line on the 5-minute chart, so that's looking ripe for a possible reversal there. But as long as this line is facing down, okay, there we go. That was a good entry, I feel, right there, because really within the range of these other price bars, so that should get hit. There we go. Sometimes you can even get two trades, you know, if it comes back and repeats that motion, you can get two trades out of a single minute, but I normally don't recommend that. I think you should, conservatively trading, I just try to get one per swing. Still got a really good strong downtrend on the 5-minute chart. Always kind of glance over to this to get a idea for the bigger picture here. So this would be one big action swing to the downside here. But it is very close to that outer Bollinger Band here. Sometimes these downtrends can continue forever, and but I'm always looking for reversals. And we're kind of narrowing inward to the 14 SMA line. It's really not. This is what also gets my attention here too, is this Bollinger Band is starting to turn inward. And with this one, it creates a squeezing effect or lowering volatility, and that usually happens before a trend change as well. So, and if I were to try to enter the trade here, it probably would have been successful. It would have hit my 3-point target, but I just err to the side of caution, and I don't want to enter too close or too far away from that 80 MA line. But yeah, that probably would have been a good trade right there. But you know, it's better to be safe. You know, if I can enter right on the line like this bar here, it's preferable than entering this far away at the open here from where the 80 MA line is. It's starting to angle inward a little bit. This Bollinger Band is starting to come up. That's a sign of the market's getting the smaller moves here, decreasing volatility. And usually you'll see something like that before crossover, an 80 EMA crossover. And that's really looking weak. So I'm just going to let this develop a little bit more. Ideally, I'd like to see a 1, 2, 3 bottom formation if it is going to change direction. And on the 5-minute chart here, you'd see a reversal back up through the lower Bollinger Band here, and it would take out if it takes out the high of this price bar here, that would look like a 80 EMA reversal on the 1-minute chart. So that's the kind of setups I look for on the 5-minute chart. That might have been a reversal here, but I'm still I'm still seeing the general lines are kind of sloping downward more than I would like. I'd like to see it come up and both lines be pointed upward. So it's good to just have patience. Let it confirm it for you, a trend change, before jumping in a trade here. As markets really change trends very slowly, so you got to be patient with it. Probably wouldn't get hurt if I went long there, but if I don't see a 1, 2, 3, I'd like to see a the crossover occur first, and then the next bar will probably be tradable to the upside here. We're kind of going flat on the Bollinger Band channel. I'm watching the distance here. As this starts to move up and expand, though, that's a good sign right there that probably looking at an emerging trend to the upside here at the next open. So I'm getting ready to buy. Now you see how that crossover is fairly obvious right now. I could have traded right there, but I just want to play it safe and let it happen first. See, as it comes back through the open here, I'll be long. See, that was kind of painless. So now we just do the same procedure for the upward move. We're looking for another P3 point. I'll speed the market up a little bit. Okay. There we go. So we're always looking for that picture right there as it breaks through the low of the previous bar. That's not necessarily a reversal. This could be a trading range, but it could also be a continuation of the uptrend. And so all that's going to depend on further development here. But at least we have an alert right there when we have that breakthrough. So we're looking for either a trend change back into the downtrend, or we're looking at a continuation of the uptrend here. And so we're just going to let the market show us what it's doing. No need to make any assumptions here. There's nothing predictive about this or psychic. We're just letting the market explain itself and using a set of rules to take advantage of what it's actually doing rather than what we speculate it's going to do. Oh boy. See, I don't like how far that entry point is away from the ADMA line. I'm looking at this open here. Usually I try to enter at the open that is even with the last close. That might have been a good entry right there, because this looks like a P3 point, but it's kind of at a distance from that ADMA line. I'd prefer it to be closer to that line. And I don't want to buy it as it's moving down against my trade direction here. Almost bought right there. There we go. It's kind of an impulse with my finger there. that that kind of market replay, as you can see, it entered me at a point the trade hadn't even reached yet. So a little bit of an error in the recording. In the real trades, you won't have that happen. They'll enter you mainly where you hit the buy or sell button, unless it's moving really fast, and there's sometimes a little bit of what they call slippage. You don't get the price that you try to enter at because it's moving so fast. In this case, it's really not moving that fast, so it's just an imperfection with the recording. I'll go ahead and just speed them up every time, just to we're not really cheating or anything. It's just bypassing the wait, so that we just see the next signal. It's much easier to illustrate that way, even though part of the wait is part of the problem with trading. You have to kind of look at things as they occur in slow motion. So that's another breakthrough of previous low. And so the question is the next trade going to be long, or is it going to be start bending that ADMA downward? And basically we're getting into kind of a iffy area. The market's in general is sideways, so I know it's not really a strongly trending market. If you look over here on the 5-minute chart, see how we're the Bollinger Bands are basically moving sideways. They're flat, and the range is up and down. If you were to look at a really strong trend, it would just be a solid line all the way down. So you'll be able to tell the different types of markets at a glance. And so this is the type of market that changes direction easily. So I don't expect strong trends either side of the ADMA line. So I'm more on the alert than I would normally be in a trend for a crossover happening. Even though right after the first crossover, you've got a very high probability, but as the trend progresses, it starts looking weaker and weaker, so you become more suspicious that it might be a changing trend direction. So we'll just see, keeping a little bit patient. See, if I would have jumped on this trade right here, it wouldn't have hit my 3-point target. It hit 2 points, but so that's why you always want to let it come back down, hit the ADMA, then take the trade as it comes back through the previous close. So it's good just to have patience, let it tell you what it's doing with the ADMA line. And so that's really a weak signal right there. I don't want to be a long trader when it's bending inward. So I'll just move it normal time here. In fact, I could just I'll just show you how I was going to show you how a sell stop works if you want to enter the trades that way. So what I did is I right-clicked the mouse here, and I'm entering on a sell stop. That's not quite 3 points, so I'll move my target. Maybe I'll just go for a 4-point target there. You can modify your stop loss order and target if you want. I recommend try to stay as fixed, or try not to move your stop loss as much as possible, because that's your risk. You don't want to be gambling and increasing your risk. If you're wrong on the trade, you want it to take you out, even though it's a loss, and those are painful. Which it might just do right here. See how there's that urge to move that stop loss as it comes back against it, and I resisted that urge. See, my timing was a little bit off there. I didn't wait for that crossover to occur, but looks like we're gonna, okay, we hit our 4-point target. Again, I'll just speed this up a little bit. Looking for the same things. We're looking for a fractal to the downside. What I'm watching here as well is if you look on the 5-minute chart, what I'm seeing here is a 1, 2, 3 bottom setup. You know, the formations will be the same on the 5-minute chart, just at a different time frame. But I'm seeing this 1, 2, 3 bottom setup, which would be the equivalent of this area right through here on the 1-minute chart. So this would be the 1, 2, 3 on the intermediate swing, which looks like the minor level swing on the 5-minute chart. That's why I use a 5-minute chart, so I can see the intermediate swings at a glance. So that looks like a 1, 2, 3 bottom formation. So if I see that next 5-minute bar come through that ADMA line towards the upside, I want to be a long trader there. So we'll see how that develops. Essentially, you know, all you really have to do, if you're new, is just wait for these crossovers. Just be very patient. You don't even have to trade right on them. You can trade the first bar after the crossover, as long as it's close to the ADMA line. See, that looks like it bounced off a flat Bollinger Band here, and it's heading back up for the crossover, which is coincides with the 5-minute 1, 2, 3 formation here. So that's what I'm starting to suspect. Oh, there we go for the crossover here. Oh boy, that software didn't get me in too well. See how it moved my entry point, so we barely even had enough room for the target. So that was good. You kind of have to be, I was kind of looking over here at the 5-minute chart at the time that thrust outward occurred, so I was kind of late on that, but you see how quickly that can occur, and so it's good to be on top of it. But we were already anticipating it by looking what was happening on the 5-minute chart, so that gave you a heads up alert. So back here, the next thing, it's the same process. You were looking for P3 point. And it's sort of the same routine every time. So there isn't a whole lot to really learn. And like I said, all you have to really do is trade at the crossovers or spot these crossover points, and then you might take one or two trades after each of the crossovers. So let's speed it up to the next P3 point. Sometimes in a really strong trend, it won't come back and hit the ADMA line, and so I'm also aware of those. We've got a really strong thrust outward, and it's kind of heading up like a rocket here. And so a lot of times, if you get a lot of momentum like that, it won't make it all the way back to the P3 point. The ADMA line. So in this case, I might take a breakout of the high, just so I see a lot of momentum continuing in this direction. I don't ever want to trade when it's going opposite my trade direction. I want to wait for that P3 point to be confirmed first. But in this case, it might not even make it back to the ADMA line. So I think I'll just trade the breakout of the high here if this is the P3, and so that'll show me that it's got momentum still in the upward direction, even though it's generally where I don't like to enter trades, which are mid-channel and they're far away from the ADMA line. I just adjust my rules a little bit based on what the market's doing. If it's really strongly trending, sometimes it won't give you opportunities to enter by hitting the ADMA line. So you kind of have to adjust your thinking depending on what the conditions are. So let's let that develop a little bit. Yeah, if it broke above the resistance area or the high of this price bar, it would drag this ADMA line up with it. So I want to see that momentum first. Looks like we're going to get it here. Okay. That software really helped me out again. You know, sometimes it errors in your favor, but what I want to see is 3 points beyond this high. So that was kind of a glitch entry there. So let's see if we get 3 points of movement above this high, if that was a correct decision there. So we're almost at 2 points. And so yeah, if I would have got in at that breakout, it looks like it's going to try to hit that target, but I want to see it come through this line right here. There we go. So I would have hit a 3-point target if I got in at generally those are kind of scary trades, you know, getting in at mid-channel, mid-Bollinger Band channel there. So I'll just speed it up. Not really. Okay, there's a P3 point, but it's looks like a reversal. It's kind of iffy right there. You see how it's starting to come back up, but I don't feel how too good about how parallel that looks. It still looks like it's converging with the 14 SMA line. Okay, that would have hit a 3-point target, but on the 5-minute chart, I'm seeing it. An entry would be mid-channel. Right here would be the entry point would be close to the upper Bollinger Band, which I don't like to see that. Preferably, I'd like to see the 1-minute chart trades aligned with where you'd want to enter on the 5-minute chart, which would be close to the 80 MA line. But anytime you're getting the upper Bollinger Band or showing signs of weakness on the 1-minute chart, that makes me a little bit cautious. Even though that would have been a good 3-point trade right there. Okay, see how now the Bollinger Bands are converging inward. That's a sign of decreasing volatility. So I start to look for a crossover when I see that. And I'm also seeing the angle inward here. Okay, that looks like a sell right there. See how we're kind of confirming. That's why I like the market replay program, because you can stop it, whereas in real time you wouldn't be able to kind of stop and analyze it. But I'm kind of doing this subconsciously. It's harder to say consciously what I'm doing because it's such a programmed response. Sometimes I have to stop and analyze why I'm doing something, because I've just trained myself to just see things. And but you can see what we're seeing here in the 5-minute chart. This bar right here, started in the previous bar. It started moving downward. The close of this bar is lower than the open here as it moves back through the upper Bollinger Band. And even though this trade would have been good for this upward movement here, the entire movement from the high here right back through the previous close shows me that there is momentum in the down direction, and it's heading for the 80 MA line on the 5-minute chart, and that's coinciding with the crossover to the downside on the 1-minute chart. So that says all those signals happening at once tell me that a short trade is a good idea here. And so all these things are kind of happening subconsciously. In my actual trading, I'm never talking, so it's very difficult for me to put in words what I'm actually doing. And it's so much easier that I think it, I see it instantly. And that's the way you get after a while. After you watch so much of this, you just see it happen. And it's also obvious to a newer trader too, just by looking at the what's happening with the crossover. So all you have to do again is just look for these crossover signals. But I'm trying to show you a little bit more to it than that, where you can use all these other signals as well to confirm it, and to give you the confidence of actually entering the trade. So Oops, I tried to modify it before it hit my target too quickly, so I'll enter another one. As long as you're making a profit, you don't have to worry about trading too often, because the commissions are taken out of the trade as it happens, and the brokers love you the more times you enter the market, because the more money they make. I'll get out of that. The reason I got out of that one is because I am seeing these Bollinger Bands are converging pretty rapidly. That tells me that usually there's a trading range to follow. So yeah, I'll just get out of that. See how these are getting so narrow, and the distance from the ADMA line is this Bollinger Band is converging with that 3-point target. So, and when it starts converging like that, the Bollinger Bands, they usually call that the squeeze area, and you want to try to not trade in these areas, because usually that's a sign of a congestion that'll happen. As much as I saw that it was looks like it's moving downward, I see now, I didn't see at this point right here, it looked like we had a lot of room, but and still, I would have hit that second trade, but yeah, this is one instance where you're looking at other signals here where the crossover is getting close to not working. So I'm kind of backtracking on what I was just saying about just seeing things automatically. But that gets to the point where you're really not a psychic. You're letting the market tell you what it's doing in the moment. So things can change in a moment. So I'm now seeing this trading range form, and so each side of the ADMA line gives you a good estimate when it's flat like this, what you can expect for your target. So 1, 2, 3 points is the distance between the ADMA line and the flat Bollinger Band. So that tells me the most likely thing to happen here is a bounce upward, back upward. And so you wouldn't want to be a short trader in this side of the market right here. I'm waiting for a crossover to back to the upside, and that's what it looks like it's doing here on the 5-minute chart. So this wasn't a reversal on the 5-minute chart like I thought. Looks like it's continuing back in the up direction, but I changed my mind very rapidly in trading, so depends on the conditions. Like things can change every few seconds, And so even though that looks like a crossover, that would have been a successful trade right there. But I'm still trading within a range here, and anytime it's on that side of the market in a range, the ADMA line, see how it's below the 14 SMA line, it's still on the wrong side of the market to take a long trade. I want to see that crossover occur first, even though that would have been a successful trade right there. And if it's going to start, what I'm looking for is a breakout of this range and for it to start trending again. When that happens, the Bollinger Bands will start flaring out, and we'll get a definite crossover on the 80 MA. You don't want to trade anytime it's a little bit ambiguous or you can't tell direction. It's not a failure on your ability to read the markets. It's just that sometimes even the traders haven't figured it out where they want to take it yet. So you got to let them decide where they want to take it. Then you jump in after the momentum's established, and then it starts making sense again. But anytime it doesn't make sense, or it's flat, or it's ambiguous, or the 80 MA line is lying on top of the 14 SMA line, just let those trades go. You don't need to trade everything. So, but you can see how the Bollinger Bands kind of alert you by their constriction here that we're coming into a range, and to be alert. At the point I took this trade, there's a very good possibility it could have bent over and started a downtrend. I really didn't know at the crossover, so only after that crossover occurred did I find out. But since I'm using 3-point targets, I was safe in that, in taking that trade. But I was quick on the exit the market if it doesn't look right. So even if you exit maybe with $10 profit, hey, it's still a profit, and you got out of a potentially bad trade. It's constricting even more here, and that's what I don't want to see. That I want to see that constriction turn into an expansion of the Bollinger Bands. See how the Bollinger Band lines are angling inward? That's decreasing volatility, and I don't want to trade when it's constricting. I want to trade when they're expanding outward into a trend. It looks like it's trying to break out of this range to the upside, though. And I'm just doing this in real time just to show you that it does take patience. Even though you're trading fairly rapidly by the minute, it's still it can test your patience. So you never want to rush something. Just always let it come to you and tell you when it's right. And because we're looking at such a tightening and restriction here, it's not looking right yet. So wait for that. Bollinger. It doesn't matter which direction it breaks out. The Bollinger Bands will still expand outward from each other. They'll be like a bell formation. It'll expand outward. And see, this 80 MA line is crossing over to the upside. So that's where I'm kind of biasing my, even though it could reverse and go in the other direction. So I'm just getting ready. My bias is that it's probably going to be a buy here, but I got to wait for that trend to start first. So I'll just keep my cursor on the buy at the market button. See how it's starting to bend outward. I want to see that breakout. Whoops. I don't know what happened there. Yeah, something's messing up with the let me see here. Well, there's some glitch here. That's weird. I have no idea why it's doing that. Oh, and I entered the wrong direction here. Gosh. Finally got the right direction, but I'm using my buy at the stop button. I don't know why the buy at the market buttons have stopped working. That's never happened in a live trade, but the market replay program can be a little bit glitchy here. All that screwing up though has created quite a bit of profit. We're almost at $1,000. Let's see if it fixes itself. Too far away from the... There we go. After a breakout here, if the volatility is kind of low, it's not really a very strong trend here. In that case, I want to see it touch the 80 MA line and then start moving back upward before I feel comfortable buying. Oops. I almost got in at the wrong time there. I want to wait for it to come back through the previous close. Show me that it has momentum there. And it's still... something's still wrong here. You don't do that in live trading. Enter the wrong direction. Don't do what I do. I'm just messing up because there's some glitch in the program here. But it's enough to show the principle. And I'm getting to show entering on a stop on a couple of these. Usually after the first hour, it really starts to slow down. That's another thing. I glanced down and I realized I clicked off my stop loss. You don't want to do that either. So I'm gonna get out of this trade. I don't feel comfortable with it. If I have to, I'll reverse it. One nice feature is it has a reverse button, but I try to use that sparingly unless I get into a really bad situation, but you don't want to use this a whole lot. Okay. I'll just get out of that one. like I said, it can go on to hit your target, but it's not a good idea if you're uncomfortable to trade for any reason, like how far the entry is away from the ADMA line. Just don't hesitate to exit it. There's no reason to stay with a bad trade. And if it reverses on you, then just go ahead and hit the reverse button. But you have to really see it solidly reverse. What this reverse and cancel button does is it actually, if you're, let's say you're long, it'll actually, if you're long one contract, it'll actually sell two contracts to take you out of the first one, and so now you're short one contract. So that's what that's doing, and in the time it takes to do that, it can have some slippage on you. So if you get into trouble, these are the reverse and cancel buttons. The last thing you want to rely on, but only used in a rare situation where you know for sure you were absolutely wrong on the market direction, because you can get into trouble with that button right there. See how weak this is looking here, and the Bollinger Bands are going flat, and looks like it's heading for a crossover. So this is pretty much a trading range right in here on the 1 minute chart. 5 minute chart is still meandering in an uptrend here, but it's kind of looking weak here too. So if a drop below this support of the previous price bar, that would be that's actually a retracement on the 5 minute chart, but usually those are good trades on the 1 minute chart, especially if there's a lot of room between the low of the previous price bar on the 5 minute chart and the ADMA line on the 5 minute chart. So if there's a lot of room here, break below that low would be a good crossover trade on the 1 minute chart. For some reason, the sell side of the sell market seems to be working. I don't know why there's this glitch in the long trade. Kind of got in that one too early, but yeah, I like that movement there. See how the volatility is decreasing. The point lines are becoming farther apart. Now it's not getting me out of the trade when I hit my target there. Like I said, I've never had those kind of problems in an actual live trade. These are just glitches associated with the market replay program. Anyway, I think I've probably shown enough. I was going to show the first 2 hours, but you know, if you kind of drag these things out, they get kind of boring. So, and since we're having a glitch anyway on this program, we already reached $1,045 profit just from little 3-point trades, including several screwed up trades. So that's just shows you that things don't have to be absolutely perfect. You're just trading at the signals, and before you know it, you're looking at a profit, just little 3-point trades. Pretty good profit for the day, and that's only the first hour after the open. So this probably would be a good point to end this. And like I mentioned, there's in the comment section of this video, I'll go ahead and place that tutorial on my trading method, and you can see here that it works, it's effective. This is how it would work in the real market. So even though it's not a really great polished presentation, I'm kind of biased in that I think it's still the best method that I've ever come across for day trading. And pretty much any time scale, you could scale this up to trade on a daily level as well, and it works for most types of markets. Whether you're forex or stock, you could set up the same indicators, and it's just the way the ratio of the markets kind of move with these patterns, and so these are kind of universal patterns, and they hold up regardless of what the level of volatility is or what time scale I'm using. So it's a really, if you got a system like that, it's a really good system, even though I'm not the best presenter in the world, but at least it gets the information across. And so that's what I've done in my other video that explains the method, which is in the comment section, but it's not a lot of misstatements in there, and it's kind of a rough cut. I'll probably do another version of that at a later date, but at least you get an idea of how the system works. It's pretty comprehensive. So I'll end it here, and have a good day.